The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
I'm doing really good, Casey. Fantastic.
Good deal, man. Came off the Kansas Wheat Tour this last week here, and kind of like you talked about in past years, they came out with more than what people had anticipated seeing happening. The people I talked to, boots on the ground that I've talked to in those western Kansas, south central Kansas, and north central Kansas, told a different story than what the crop tour told. But they were out there looking at it, so and I wasn't, so it is what it is. But I guess, Shawn, what's your thoughts there, and how do you see this playing out for the rest of the month here of May going into June?
We warned about this. I mean, the trend is normally this crop tour does show larger production. Doesn't mean they're right, but look, crop tours are estimates. They're not exact numbers. It is a better estimate than just throwing something out of the wind. The USDA is going to say what they're going to say. Crop tours are going to say what they're going to say. The market will react the way it's going to react. but I just don't think this is a major driver for the market. Whatever it is, it's going to be better than it was the last 2 years. And quite frankly, it's just not the driver. The wheat market is not up because of worry over U.S. production. It's not. It's up because of Russia, Ukraine, weather problems. Russia controls the wheat price. Everyone else trades off of Russia differentially based on their own micro fundamentals. So it just doesn't. I mean, on the margin, it matters to what premium or discount we trade against Russia, but we just don't drive it anymore. I mean, look, for 18 months, Casey, we tried to rally the wheat market on other fundamentals, and we'd have 1 to 2 day rallies, and it came right back to where we started because Russia's price was not supporting the higher price. So in essence, it doesn't really matter what the crop tour says. What matters is what's going on in Russia. If Russia's in trouble and the Russian prices take off, we're going to go up, and it doesn't matter what the crop size is. It really doesn't. Now, it may mean we trade at a smaller premium to Russia, than we would if we have a bigger crop. But if the Russia price goes up, we're going up. Period. End of story. So let's focus on what does set the price, which is Russia. And I would try to diminish a little bit, worrying too much about what this crop tour is or it isn't. Bottom line is, it's the best crop we've seen in 4 years. Not the biggest crop we've ever seen. We can debate all we want, but I think Russia's the driver for the foreseeable future.
Right on. So before we started talking here, you said that this is the first real weather-related issue that you saw for Russia in the last 7 years. Talk about that a little bit.
Well, I think it was 2017. I think was the last time that we had a major crop problem in Russia wheat. We had a big knockdown, and the market really reacted. Since then, they've just had some. Even though weather's been crazy elsewhere, they've just been getting very good production. And we started off with the idea that might have a 95 million metric ton wheat crop, best ever or near the best ever. And now I believe most of the estimates are around 88. I don't believe that fully reflects the multi-day frost that they had. And it certainly doesn't factor in the idea that I think we could have a dome coming into Russia here at the end of the month that could at least last into mid-June. 2/3 of the crop is going to be jointing at the end of May. And if you want to hurt the wheat crop, Casey, it's hot, dry weather from late May into mid-June. If that happens, and I think highly likely our work says that's going to happen, we could be talking about a crop, in the low 80s, down from what was expected to be 95. Depending on how dry it is, but that's a huge miss. And it could get considerably smaller. Like I said, I'm just kind of basing it on kind of a mid-range drought into mid-June. If it's on the more severe side, we could go considerably lower. But you lose. Remember, if you take Russia out of the mix and you look at all the other wheat exporters in the world, and you take a look at their exportable supplies, and you divide by the demand for those exportable supplies, we're at 35 to 40-year lows in stocks to usage in exporter hands, minus Russia. So without Russia, we have no wheat. They've been the linchpin. They've been the only thing holding this market back for 18 months. Successfully, by the way, very successfully. Take them out, which a crop shortfall like this would certainly do, Casey. The entire game changes. And this has nothing to do with any geopolitical mayhem that may take place between now and the elections and post-elections and such forth and so on. This is just supply-demand, weather-related fundamentals. So, the wheat market, after a very painful, I think it was a 70% decline from high to low over an 18-month period of time, looks to me like it's on the mend, and it could be the driver of the whole grain complex, at least for the first half of the growing season here.
Right on. So we had a couple listeners from Australia type in about how dry it's been in some of their key growing areas. What are you seeing in Australia right now that could be a driver at all in the wheat market?
Yeah, when we just put out a forecast for we have a big Australian conglomerate customer that we do a quarterly weather report for their weather specifically, which is Oceania, Australia, New Zealand, that sort of thing. And the takeaway from our work was that the ongoing risks for drought is going to be Western Australia. Now that the East is going to get rains and they're going to be fine, but Western Australia we see continuing to come up short in the current weather scenario that we're looking at, and that is happening. And I think that's going to continue to happen for the foreseeable future. I do not believe that they're going to get. Doesn't mean no rain at all, but I mean what it means is that I just don't think they're going to get the kind of shift in the weather pattern that's going to allow them to produce a good crop. Doesn't have to be a complete unmitigated disaster, but I see ongoing drought risks in Western Australia for the foreseeable future. That's been was the forecast we sent out to our customer here last month, and it's playing out exactly as we had suggested, and we see that continuing all through the summertime months here.
Okay. Let's talk a little bit about what you see happening we haven't talked about milk for a while, so let's talk about milk. So you're looking at the milk market right now. I think the last time I saw Class 3 milk was trading just above $20, kind of back and forth there. With the avian flu situation that we've seen hit that, has there been any more movement in the marketplace than what we've seen so far here in the dairy market?
Initially, the milk market got crushed. Everyone thought that the consumer was going to pull back, consume less milk because they were afraid of getting sick if this infected milk got into the supply. And the USDA and others did a very good job of communicating that pasteurization inactivates avian flu virus, meaning that in the event that some of this milk were to get into the milk supply, it's not going to you're not going to get sick from it. Now, obviously, every cow is being tested prior to being sold anywhere and prior to being milked, so that if there is an affected cow, it's immediately reported, it's immediately taken out the supply chain to hopefully mitigate that any of that milk gets in there anyway. But this entire process is kind of made people aren't really worried about it. So we haven't seen demand pull back based upon avian flu. What has started to happen, though, we shifted now to more and more animals are starting. It appears that far more animals have this than we were originally led to believe. And we know that the first 45 days of production, there's anywhere from a 10 to 15% reduction in production, sometimes even more, depending on the dairy you're on. And then it's kind of comes back, but we're also finding that it doesn't come all the way back. You might still be off, 1 to 3% from where it would have been. Doesn't sound like a lot, but if you're dealing over a large group of producing cows, it is a lot.
Right.
So the market has skyrocketed, Casey. I mean, I think the nearby traded over $21 Class 3 milk, which we haven't seen in quite a few years. And the problem is that we're at peak production right now. We're at peak production seasonally.
Right.
And trough production seasonally is in the fall, early winter. So, and we're already starting to see that we're developing potentially some shortages, the way the milk market's trading. And then we also have this massive dairy cow replacement shortage, meaning because so many dairy cows are being bred to beef cows, because the beef cows are fetching so much money because of the shortage of beef cattle. The amount of replacement dairy cattle that is available to expand if and when the market gets the right price signal, they're just not there. I mean, we're looking at record high prices that you have to pay currently for replacement dairy cattle to just replace your herd or to try to grow it. The longer term factor here is that if and when we get a $25 milk price or something up there that's very, very profitable that would possibly make the dairymen want to expand again, I don't think they can actually do it this time because of this very unique situation with the very high cattle price for beef and the record-setting breeding of dairy cattle to beef cattle. Until that gravy train of money for the dairymen goes away, that's going to continue to happen. So this is, this is setting up an unprecedented situation for a milk shortage in the U.S. The likes, I'm not sure, we've ever seen anything quite. I know we've never seen anything quite like this. I mean, this is really unique. I don't know how it's all going to play out. Obviously, milk can't go up into infinity. There is a sensitivity for milk price to demand. We know this, but we might be pressing those numbers, Casey, on what it's going to take to get demand down enough to ameliorate this situation. And the way I look at it, the tight cattle situation in the beef side. I mean, I don't see that ending anytime. I don't see that ending anytime in the next couple of years, Casey. So this situation is just not going away. And the problem is that no one else in the world is growing milk production either, because the economics have been so bad. I don't know. I see a very, very, very unusual situation developing here in the dairy market, where the biggest problem for the dairy industry has been they hurt themselves. They always expand more than they should, and they overproduce. Then the forces of the market may prevent them from doing it this time. And if that's the case, we may be in for a prolonged period of dairyman profitability, the likes we haven't seen before. And obviously, after one of the ugliest periods in dairy in the U.S. dairy industry and the global dairy industry for the last 18 months in terms of losses, this would be a godsend for the industry. And my suspicion is, this is my suspicion, given the age of a lot of these dairy operators, and given the how much they've been beat up, not just in the last 18 months, but over the last 10 years, they've just been consistently losing money. I think they have a windfall profit on the farm like this. I think many of them are going to just exit the business and say, I got my money back. I'm now rich. I can sell out and I can go ahead and do something else in my life. I think that's going to happen a lot. And we're going to get a significant liquidation of dairymen who we just want out at the top, and how that all plays out with who buys those assets and those cows, and how this all gets, it's going to be a messy situation. But I really believe a year or two from now, we're going to be talking about, how many of these dairymen, how many sales we're hearing about, not forced sales, willing sellers in the dairy industry to get out of this, which has been a horrible business for a long time. That's the way I see it. But for right now, the next 1 to 2 years look phenomenal for the industry, the way I see it right now, for these unusual factors that have come to play that no one could have anticipated were going to play out just a year ago in terms of this avian flu and how it was going to play itself out here. So, and last thing,
Sure.
What we also don't know, are we going to have another round of this next winter? Because we know flu, it goes away, it comes back, it goes away, it comes back. COVID, bird flu. We know bird flu comes back, and sometimes the next round's worse than the first round before there's enough resistance and such forth and so on. So this is just round one. There could be a round two next winter and spring, Casey, in which we have to go through this all over again. So just keep all this in mind, that this is a wild, wild situation, to say the least. Definitely a market to pay attention to for sure.
Let's talk a little bit about corn and soybeans real quick. So if you're looking at the corn and soybean market over this past week, it kind of fluctuated based on what you saw happening with wheat. Wheat started going up, corn, soybeans kind of get drug up with it, and so on and so forth. As you're looking at what happened with soybeans, though, last week they closed, had a couple pretty good days in there, but there's a lot of volatility mixed in that. As you're looking at those two specifically, what are your thoughts there?
Well, look, the bearish side of the equation is we have had a very wet May. We warned about this. We said we were going to have a wet, cool May. If there's going to be a move during the spring, we thought it would be in the month of May. Okay. And of course, everyone's focusing on what that means for delayed planting and such. It's all going to get planted. It's going to
always does.
Yep. Always, it's going to get planted. We may get less corn acres, more soy. The acres are going to get planted. I can assure you they're going to get planted. But once they get planted, all that moisture is bearish. It's bearish. I mean, we're starting with a lot of moisture in the ground. We haven't had this kind of moisture in the ground. 2019 was an extraordinarily, flooding. I mean, that was a horrific situation. But the crop still turned out decently, Casey, in 2019 because of all the moisture in the ground. So that's bearish, meaning in order to take all this moisture in the ground, Casey, and turn it into a crop problem, you have to have a very hot July, period. End of story. Not 90 degrees. It needs to be 100-degree temperatures to evaporate the soil, get it down, and start, hurting the crop, the corn crop and the soybean crop, and start, getting the market thinking that all this moisture is going to, maybe not necessarily, and that can happen, but it has to be a very hot late June to early August timeframe in order to counteract that. Until the market sees the models telling you that's going to happen, once this crop gets planted, and it will over the next 1 to 2 weeks, it's bearish. For typically when you start off the season with this much moisture, you have you have trend line to above trend line yield crops historically, unless you have a very, very hot July. Now, I will alert everyone to 2010 and 2011. Both those years, 2010 was an El Nino moving into a La Nina. 2011 was a La Nina, okay? But we started both years off with a lot of moisture in the spring, both years. Meaning we had ample subsoil moisture going into the growing season. Both years we had below trend line yield crops. In fact, in 2011, it was a pretty sizable below trend line yield crops because, warm nights.
Okay.
In both those years, it was the warm nights that actually hurt the crop. So there's two things to watch here, Casey. When you have very moist soils, what do you get in the atmosphere? Humidity. How do you get warm nights? Humidity. I live here in Florida, the most humid place one of the most humid places on the planet. Our differential from high to low is very low because the humidity doesn't allow the air. You don't get the radial cooling from dry air.
Right.
So two things to watch out for. Are we going to get these 98, 100, 105 degree days, high degree days during the day? And or are we going to get record or near record high temperatures at nightfall? These warm nights, which hurts the transpiration process, doesn't allow the corn to rest, and it can take a huge amount of yield off. And we might get a little bit of both. We might get some portions are getting the high degree temperatures, but if we're going to hit this crop, Casey, the takeaway is if we're going to hurt this crop now, given this very wet May, which we did forecast, you got to have some hot weather at night or during the day or both to knock this yield down below trend. If we don't get that, we're going to have trend line to above trend line yield crops. The market right now, that's the bearish headwind for corn and soybeans. That's the bearish headwind. Now, of course, southern Brazil's underwater on 30% of the crop, hugely bullish for soybeans. And then, of course, that's been pushing the soybean crop against this bearish moisture pattern here in the U.S. Of course, second crop corn is completely toast. That's been pushing up against this bearish headwind for U.S. moisture. And of course, the wheat market's been getting excited, which has been pushing up against this bearish moisture. But this is the battle going on right now. My suspicion is that corn and soybeans are likely to struggle to move, even if wheat moves higher, so long as we don't get crazy delays from here. Like we just kind of get the crop in the ground within the next few weeks, and we're okay for the most part. That's going to keep corn and soybeans held back. Wheat, at least winter wheat. Obviously, it's going to be driven by what happens in Russia as we get into June. And there you have it. I think that's really where we stand and what's driving the market, and that's why the wheat market's been the one to watch. Winter wheat and corn and soybeans have been sort of more sleepy, 2 steps forward, 1.5 steps back. Making some headway to the upside, but it's grinding because we're trying to fight this idea that we're going to have a very good start to the growing season with ample subsoil moisture in most areas that count.
Right on. All right, Sean, good place to stop. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our Twitter page is @Feridex11, FERIDEX11. We have a LinkedIn page. We have a website, Hackett, Hackett, advisors.com. From time to time, we put various interviews and things up there. We just posted something we did on Bar Chart a few days ago on Twitter that goes over some of our long-term weather volatility thinking and solar cycles and stuff that we've talked about on your show quite a few times that people might want to take a look at, and we might be discussing on your show and going forward here in the next few weeks. So.
Yep. So glad you brought that up because I was going to bring it up right now, Sean. Good segue. All right. Sean and I were talking about this over the weekend, doing a live show, talking just about what he put up here on Twitter and his other social media pages, where we can go into some more in-depth stuff and talk about what he sees happen as some of this weather volatility starts. Just like Sean's talked about, if you look at where these meridional flows of the way things are shifting up, there's extremes on both ends. Either you're really wet and really dry, and then it's something different in the middle where it could be a combination of both. And we're starting to see this pattern develop where over the last 18 months, even 2 years, Sean, we've seen this bigger weather pattern take place where it's not just, a little trickle of this or a little trickle of that. It's an extreme one way or the other. And I think this will be a good show. So Sean and I are working through that, trying to figure out when that'll be. It'll probably be sometime in June, that first time in June. But as time gets closer and Sean and I kind of get a date figured out, we will definitely get that posted. So looking forward to that, Sean. I think it'll be a good conversation.
Absolutely. I'm absolutely looking forward. I think it'll be a great conversation for those that are new to this topic, and those that have been watching for a little bit. It'll be a good refresher and remind everyone what we're heading into. So
right on. Okay. So start sending me your questions. If you have questions about this, like I said, it'll be 2 weeks or so before we actually pin a date down when this will be. And of course, we'll give ample notification as when this starts. But if you have some questions on your mind, make sure you send those to me. And you can send those to me on my Facebook, Twitter, Instagram, Moving Iron LLC, LinkedIn at Moving Iron Podcast. Go to the YouTube channel and at Moving Iron Podcast, you can go there. You can send me an email at movingironpodcast@movingironpodcast.com, and I can get those there as well. So send those questions in that you've got, and we will start cataloging those and putting those together and put on a nice little show for you guys. So look forward to that. So with that, Sean, enjoy your vacation for the rest of the week. We'll catch you again here towards the end of May, and we'll go from there. Sean,
sounds good.
Take care of yourself, man.
Thank you too. Thanks, Casey.
All right, bye.
Our podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. You find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time